Hello to everybody, the FutureTrend channel is again with you, and we start our analysis of commodity block of currencies. Here the situation is back to its previous kind of stance. The United States Treasury yields on the upside, and that means that the United States dollar is back to the force and is back to its underlying bullish trend we witnessed starting from middle of April this year. As regarding the commodity block of currencies, let's start from the Aussie dollar. First of all, we'd like to caution you with overpositioning in this kind of currency ahead of a very important employment report that should be published during overnight hours, employment report of Australian economy. Of course, the situation here is still very fragile for the future stance of the Australian economy, because, as you know, the last series of Australian numbers did not encourage the bulls in the currency, and from that point of view, also today during this night, we don't expect any kind of real surprise. Anyway, any real positive surprise for the Aussie dollar. Anyway, in case of some better numbers, the Australian dollar still has some potential to develop a kind of correction that could bring the currency to its underlying a bear trend that's located at the moment around 0.7710. That's the bear trend of 2018. And also here we note an important resistance barrier around 0.7640, where the first sellers will appear. But overall the situation still remains quite negative for the Aussie, and that it should be skewed further to the downside. Let's see what kind of next supports we could note. First of all, it's of course 7410, which is the lows of this year. But anyway, to the downside, there are some other interesting points to view. Among them are supports around 7330, and another one which is more reliable from a point of view of strength. That's the lows of December 2016 as well as the lows of May 2016. The lows that's located around 71.5. New Zealand dollar. Here the situation still remains quite negative. The pay is in full bear market, and from that point of view, any kind of rebound closer to 71.50 to 70.90, where rather significant resistances at the moment, such kind of rebounds should be used as a selling opportunity. As regarding the dollar Canada, despite of last kind of rebound we witnessed during previous trading session to the highs of 29.24, overall we don't expect that Canadian dollar could fall further from recent point of view. So we still suggest that sooner or later the pair will retest its immediate kind of uptrend line located around 126.30, but to the upside we acknowledge two really very important resistances. The first one is psychological important level of 130, but also here, and you can see, there is a rather important downtrend line that was drawn from the highs of January 2016 through the highs of May 2017, and this point at the moment is located around 130.80. That's why we will lose an opportunity of a rebound to psychologically important level of 130, to initiate a new short position in the dollar Canada, and we will be ready to add to this position on a possible test of this downtrend line with a stop above the highs of 2018 located around 131.25. Dollar ruble. Here the situation is quite stable, to say generally, because the market is under the pressure of rising United States currency, and we suggest that also the Russian ruble is not an exclude. That's why probably the Russian ruble is weaker comparing to the last trading session, and that's despite of much higher energy prices, because despite of geopolitical tensions in the Middle East between Israel and Iran. All in all, here the situation remains quite stable for the Russian ruble, while it trades between 60 and 65. Thank you very much for all of your attention. It was your Future Trend channel. See you tomorrow morning.